Today, we will talk about the traditional production strategy of make-to-stock, MTS, and how it works. Make-to-stock is a traditional production strategy used by businesses to match inventory with anticipated consumer demand. Instead of setting a production level and then attempting to sell goods, a company using MTS would estimate how many orders its products could generate, and then supply enough stock to meet those orders. The make-to-stock method requires an accurate forecast of demand to determine how much stock it produces. If demand for the product can be estimated accurately, the MTS strategy is an efficient choice for production. However, if the forecast is even slightly off, the company may find they have too much inventory and limited liquidity, or too little inventory and unmet profit potential. Common alternative production strategies that avoid the downsides of MTS include make-to-order and assemble-to-order, ATO. Both tie production to demand, but in the case of MTO, the output of an item begins after the company receives a valid customer order. ATO is something of a compromise between MTS and MTO. Basic parts are constructed in advance, but a finished product is not created until a valid order comes in. Manufacturing companies often use the MTS method to prepare for periods of high production. For example, many retailers, like Target, generate most of their sales in the fourth quarter of the year. For the manufacturing company supplying these retailers, a majority of their production has to come in the second and third quarters of the year, to prepare for the increases in demand. Using the MTS production method, let's say that the Lego Group, maker of the popular Lego bricks and other toys, looks back at its previous years and surmises, based on past data, that demand will increase by 40% in the fourth quarter versus the third quarter. To prepare, the manufacturer produces 40% more of its toys in July, August, and September to meet the demand forecasts for the fourth quarter. One of the main benefits of the make-to-stock production strategy is the ability to produce inventory based on anticipated consumer demand, which allows a company to avoid having too much or too little inventory. Here are 4 key takeaways. 1. Make-to-stock, MTS, is a traditional production strategy that is used to match inventory with anticipated consumer demand. 2. The MTS method requires an accurate forecast of this demand to determine how much stock it produces. 3. To implement an MTS approach, a business needs to redesign operations at specific times, instead of keeping a steady level of production year-round. 4. The main drawback of the MTS method is that if a forecast is inaccurate, a company can be left with too little or too much inventory, which can impact the bottom line. Hope this would help. Thanks for watching.